I want to bring in Gene Munster, Loup Ventures Managing Director. All right, Gene, will their service business get the stock out of the rut?
The simple answer is no, in itself it won't. But I think this theme about investors shifting their view, not just the service segment, which is only 15% of the revenue, growing nicely, call it 20%, but this idea of Apple becoming more of a staple of tech will get the stock out of its rut. And let me illuminate that, is that this idea of instead of just buying your phone on a 1, 2, 3 year kind of cycle, the idea of being able to buy it on a subscription basis, that predictability element is something that investors around Apple yearn for. And to put that in a perspective, as you look at Apple's multiple at 12 times, compare that if they would get a similar multiple to Coca-Cola or Clorox, that would be about a 20 or 21 multiple. This stock could double if investors simply viewed this as a stable consumer staples business. And so that, to me, is going to take probably a year plus, but undoubtedly, I think that there is optimism for this mega tech stock to get even much bigger, Stuart.
Well, that is absolutely fascinating. That really is. I've got to talk to you about Tesla. You could call it the stock of the day because it's wildly lower, down about 7.5%. They're shifting to online sales only. They've got a base, the Model 3, the base price is $35,000. They're coming out with that. But a bundle of debt comes due today that could really drain their cash hoard. And the stock, as we said, is down 7.5%. All right, Gene, start with this online sales only. Is that going to work?
I think it will, and I think you're going to see the rest of the auto industry start to move there. And by the way, Stuart, as I think about what's happening with Apple stock, before we talk about the online just briefly, is I think this is definitional to missing the forest for the trees. And there are some major positives that came out yesterday that are being overweighed by the fact that the company will lose money in the March quarter. They'll make that debt payment today, but the online stores, back to your question, is that they Elon circulated an email internally last night that showed that 87% of Model 3s have been purchased without a test drive. Basically, you don't need that sales force. By eliminating that, that saves 6% and is critical to get to that $35,000 price point. So, yes, it is going to be a change for a lot of people in terms of how they purchase a car. But with a 7-day, no questions asked, 1,000-mile return policy, it's probably more generous. And actually, no one likes buying a car in the current model, and they may find a way to improve the buying experience.
Big problem for the stock, though, today is that they're going to have to pay down that debt. It's something like $900 million, I believe, which makes a big hole in their cash pile, right? That hurts them financially.
It does, but, you know, the appearance, it is a big step back on their balance sheet, but that's going to leave them with just over $2 billion. They need about $1.5 billion to fund operations, and so I think that is less of an issue here. I think the bigger issue on the stock today is related to investors debating whether or not this new sales approach is going to work.
Okay. Fascinating stuff on Apple, Gene. The idea that it might double if its valuation goes up a bit. Now, that's really something. Interesting on Tesla, too. The idea that you can test drive for 1,000 miles and bring it back and just have fun for a weekend. I love it. Gene, thank you very much indeed. All good stuff, sir.
Thank you, Stuart.
Yes,